Let's begin amendments on Chapter 6A deductions. Technically speaking, there are no amendments to any provisions of Chapter 6A, just that one new section has been added, 80CCH. A new section is added, that's it. So, of course, even if a new section is added, that's an amendment, right? So, this is added in the Finance Act 2023. In the Salaries Chapter amendment, I have already covered this. Agnipath scheme, contribution by central government to Agniveer Corpus Fund, that is treated as salary under 17 subsection 1. Equal contribution, of course, is made by Agniveer. So first of all, what is this Agnipath scheme? Who is an Agniveer? All that let us discuss now. And one more insertion in the new scheme study material is, what are the differences between deductions and exemptions? What are the differences? 99% they don't test like this theory question. If at all they tested 3 marks question, they may test. So generally deductions are in the nature of investments and contributions in some instruments like fixed deposit, shares and securities like that. Whereas exemption, income is exempted, will not be included. This exemption is talking about actually incomes, whereas deduction is generally talking about investments and contributions and all. And 80C, EU, 80U, these are the sections that talks about deduction, and there is another section which talks about deduction is 10AA. So 10AA, once upon a time, it is there as part of exempted incomes chapter, but in the new scheme material, it is kept as part of deductions chapter. But whoever is my student, I kept it as it is under exemptions chapter itself, because it's at the end of the day exemption only. It's not actually a deduction, it's exemption only. But chapter 6 deductions point of view, it is classified as deduction. So from exam point of view, consider this meaning. And section 10 of the act is dealing with various exempted incomes. For example, 10 clause 1 dealing with agriculture income, 10 clause 2 dealing with share of profit of a partner, 10 clause 12C, which I'm going to write right now. So any amount received by Agniveer from Corpus Fund after 4 years of service, so that is exempted. So all that we are going to discuss. 10 clause 13A HRA exemption, 10 clause 10A leave encashment exemption. Now maximum leave encashment exemption is 24 lakhs maximum. Now, what is the treatment? First included in gross total income. Actually, if I paid any premium for LIC, will I include it in gross total income? No. Somebody, whoever drafted this, did not understand exactly. Generally, some income-based deductions are there. Income-based chapter 6 deductions and even 10A deduction. First, whatever profit is there from exporter, that we tax it under PGBP. Then we claim deduction, and then deductions will be allowed. Whereas exempted incomes are such that they are not at all included in gross total income. They will not be included in income at all. Now, deduction in respect of Agnipath scheme. There is a lot of political drama going around this Agnipath scheme, that government is spoiling the youth. Instead of creating jobs, they are launching all these schemes and all. The opposition is claiming all this, but God knows what are all the intentions of the ruling party and why opposition oppose it. That's a different thing. But I personally feel Agnipath scheme is a really wonderful scheme. What is the scheme? Very simple. People who are aged between 17 to 21, 22, especially 18 to 22 age group, they are allowed by the government of India. They are allowed by government of India to join Indian Army and serve 4 years for the country. And all these 4 years, you are paid honorarium. We call it a salary, nothing but whatever amount that you are getting from government of India for joining an Agnipath scheme, that is taxable for you under income from salary. You are eligible for chapter 6. You are eligible for standard deduction, all that. You are an employee of the government. That's it. You are an employee of Indian Army. That's it. For 4 years. Now, during the tenure, right, you are getting salary, right? Out of that, some 30% of the salary you have to contribute to Agniveer Corpus Fund. You need to contribute to what? Agniveer Corpus Fund. This is something like contribution to recognized provident fund, something like that. Contribution to national pension system, something like that. You need to contribute out of your salary, whatever you got, right? Some 30% to Agniveer Corpus Fund. And not only you, since you are contributing equal amount, government will also contribute in addition to the salary that they are paying you. They are already paying you salary, right? In addition to that, government also contributes equal amount to Agniveer Corpus Fund. So you are contributing, government is contributing. Within this 4 years of service, you can't withdraw single rupee. After 4 years of service, you can happily withdraw the amount. If at all unexpectedly something happens to the Agniveer, the one who joined in Agnipath scheme, we call him as Agniveer. If something unexpected thing happened to him, his nominees will receive. Whether he receives after 4 years of service or nominee is receiving that corpus ultimately at the end of the service fully exempted. Whatever amount that you're receiving is fully exempt. Any payment from Agnipath Corpus Fund or Agniveer Corpus Fund to a person who actually enrolled under the scheme or to his nominee is exempt from tax. So 10 clause 12C, a new clause is added in the exemptions list in the Finance Act 2023. Not only that, now Agniveer is contributing, right? So whatever you are contributing, first of all, whatever salary, suppose no government is paying me 30,000 rupees per month salary to me. Okay, this is treated as income from salary. 3,60,000 is my gross salary. Out of this, some 30%, which is equal to 36,000, I am contributing to Agniveer Corpus Fund. I am contributing. Whatever I contributed, no? So whatever I have contributed, like look at this, how it will be like. Suppose Agniveer, I'm calculating salary income from Agniveer. Gross salary is equal to, let's assume 4,20,000, 35,000 per month salary. Let's assume 4,20,000 minus standard deduction, how much? 50,000 flat. So now what is the net salary income from salary? 3,70,000. This is net salary. And not only that, like once again, now your actual salary that you are getting from government is 4,20,000 plus central government is contributing on your name. Central government is contributing on your behalf to, Agniveer Corpus Fund, which is in the nature of 80 CCH subsection 2, that contribution. Now central government is contributing, right? Approximately some 30% they are contributing. 4,20,000 into 30%. Government is contributing 1,26,000 man on your name. So total salary is how much? 4,20,000 plus 1,26,000. 5,46,000 is your gross salary. This is considered assuming 35,000 per month salary for 12 months. Now this is gross salary. From gross salary, we are eligible for standard deduction, right? 50,000, claim that deduction. 546 minus 50,000. How much is that? 4,96,000. Now, if at all the SSC is going with 115 BAC, on this whatever tax he gets, that entirely he can claim it as a rebate under 87A because of 115 BAC. Up to 7 lakhs you can claim rebate, yes or no? Up to 7 lakhs total income you can claim rebate of 25,000. Suppose you don't want to go with 115 BAC. Suppose if the Agniveer decided not to go with 115 BAC, then he can claim 80 CCH subsection 1 deduction. He can also claim 80 CCH subsection 2 deduction. Subsection 1 deduction is what? Whatever you are contributing, you are getting 4.2 lakh, right? 4.2. This is not the amount you are getting into your bank. On this already government is deducting 30% for your contribution. How much? 30%, 1,26,000. So they are paying you 420, right? They deduct 1,26,000 from your 420 and pay to the Agniveer Corpus Fund. Government, in addition to that, they are also paying 1.26 to Agniveer Corpus Fund. So under subsection 1 of 80 CCH, employee contribution to Agniveer Corpus Fund, Agniveer contribution, 1,26,000 you can claim deduction. Not only that, on your behalf, employer, central government contributed, right? And whatever central government contributed is taxed as income, right? Tell me, have you received this? No. So first it is treated as income, but you invested it, right? Accordingly, you didn't invest. First they gave you the income, immediately they paid it to the government again. So that 1,26,000 you will again get deduction for employer contribution, for central government contribution under subsection 2. Now, what is the net income? 4,96,000 minus 1,26,000 minus 1,26,000. Your net income is going to be 2,44,000. This is your total income. This is how for Agniveer total income will be calculated. Now, what the provision says, 80 CCH says, if Agniveer is contributing from his salary contribution to Corpus Fund, that deduction you will get under subsection 1. If government is contributing in your name, equal amount, first it is taxed as income. Just like contribution to National Pension System under 80 CCD subsection 2, same. Now then, since it is already taxed as income, but you didn't receive, and moreover it went to the savings, you can claim it as deduction. Are you getting it? And you know what? Under new tax regime, default tax regime, you cannot claim subsection 1 deduction. Under new tax regime, default tax regime, you cannot claim subsection 1 deduction. But you can still claim subsection 2 deduction. Subsection 2 you will get. Whether you go with optional tax regime or whether you go with the default tax regime, doesn't matter. You will get deduction for subsection 2. And one more important twist. There is a section called 80 CCE, if you remember, if at all you remember, which says the deduction under 80C, 80CCC, 80CCD subsection 1, all these three sections put together, maximum deduction shall not exceed 1,50,000. Overall limit for 80C. Remember, in this list, CCH subsection 1 is not included. Remember, the CCH1 is not included. By mistake, you may take CCH1, but CCD1, contribution by an employee to national pension system out of his own salary, that is covered under overall limit. But contribution to Agniveer fund by Agniveer from the salary that he is getting, no, out of that he is contributing some amount, no, that is not covered under overall deduction. Remember this point. And CCH subsection 2, of course, this is in addition to overall limit. You know, even though if you're following default tax regime, 80CCD subsection 2, CCH subsection 2, right now what we discussed, 80JJAA, all these three sections related deductions you can still claim under default tax regime. Remaining all other deductions you cannot claim under default tax regime. That's it. Over. 80CCH amendment is over. So simple it is. So what is an Agnipath scheme? It's a scheme of central government which is launched in 2022 for enrollment of Indian youth in the Indian Armed Forces. The Agniveer Corpus Fund means a fund in which all the contributions of Agniveer and matching contributions of the government along with interest are held. In that fund only it is held. Agni features of this scheme, what are they? Each Agniveer is contributing 30% of his package to the individual Agniveer Corpus Fund. Further, the government will also do a matching contribution to Agniveer Corpus Fund. The government will also pay interest as approved from time to time, whatever to the outstanding balance is there in that fund. And 80CCH, it provides deduction in respect of contribution made in Agniveer Corpus Fund by an individual who enrolled in Agnipath scheme and also contribution for the central government. Quantum of deduction for SSC contribution. SSC means what? Agniveer. Under CCH subsection 1, it gives a deduction for amount paid or deposited by SSC who is an individual enrolled in Agnipath scheme on or after 2022. Of course, only after you enroll, you deposit. Deduction under 80CCH1 will be available only if you exercise the option of shifting out. You exercise the option of coming out of DTR. Means you are declaring under normal tax regime. You are declaring under optional tax regime. You are not declaring under default tax regime. Then only subsection 1 you will get. However, central government is also contributing, right? Under CCH subsection 2, the whole amount contribution made by central government to the said fund in the Agniveer fund is allowed as deduction in computing total income of the Agniveer SSE. The entire contribution would be first included in salary. That's why salary definition has been modified by inserting 9th clause. However, deduction under CC2 will also be available. And remember, this is completely different. CCH2 deduction will be available to SSC irrespective of regime, which means it is allowed even if the SSC has exercised the option of not shifting out. Even though you're not coming up default tax regime, you still get CCH subsection 2 deduction. Over. This chapter 6 deduction amendment is over. Are you clear? So I hope you're watching the marathon also, part 2. In the part 2 marathon, this amendment is added. And of course, the only chapter 6 reduction amendment video is also separately there on the YouTube. That's it. And exemption from the Agniveer fund, no, whatever corpus fund is, whatever amount you withdraw after completion of your service, 4 years. During this 4 years, government will not let you to withdraw. After 4 years of service, if you withdraw, your nominee, if at all, they are getting fully exempt. 10 clause subsection, 10 clause 12C. 10 clause 12 and all is talking about provident fund. 10 clause 11 is talking about public provident fund, all that. But don't get confused. This is important latest amendment. That's it.